Your computer just shuts down. All the windows are gone. And then when you open it back up, all the files are in different places too. It's like a nice little Friday morning gift. So, yeah, hope you enjoyed that unplanned pause. And now we're back, I guess. We'll see what happens. But what we can do is we can get that thumbnail going. So, all about the thumbnail. Let's see what we got cooking here. Oh, you know what? Do we have a thumbnail cooking? What is this? Why is it scheduling stuff? What is all this crap? I just don't understand what is going on with this. It's just randomly scheduling a live every time I go live. So it's just like, where did this come from? Get out of here. Oh my God. This is horrible. What do you think? $5.99. All right. Here we go. If you do have comments, questions, drop those in live. All right. I guess the camera is now tiny too, which is fine. It's just a little weird. But whatever. This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 9th. The company is Next Tracker, ticker symbol NXT. They're a solar panel company. The panels track the sun. They had almost $1 billion of revenue, up 40% year over year. There's another company that had revenue up 40% year over year, a little bit less revenue, $150 million. Company is Lemonade, ticker symbol LMND. They do insurance technology, which is a fancy way of saying they pay for advertising and then they have an automation that you could probably set up honestly yourself, maybe not quite as good as theirs, to send people who click on the ad to a page that tells them to call an insurance company or, enter their email for a quote or whatever. So anyway, let's jump into a little breakdown right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so here is a Next Tracker. This is the company that is doing well in the solar sector. And seeing as my entire computer just crashed in the middle of a live stream, I guess it's no surprise that I have to open up every single program in order to show you guys the charts and all that again. So anyway, Windows 11 is horrible. This is a lot of money, almost $1 billion, up 40% year over year. And they have this backlog of $5 billion, which is up 10% year over year as well. They did increase their guidance, and everything seems exciting. This is, of course, true. Solar is rate cut sensitive, but so is basically the entire economy. all these build outs are basically real estate build outs for the data centers. So those are rate cut sensitive. The Fed is talking about, maybe this month there will be a rate cut, but there's no new information. So that's really all that matters. It's not about like, let's tell you all the information, let's learn all the information. It's, is there new information, and what companies are going to be helped or hurt by that? That's what a market is, right? Someone in the comments can, talk down on me for simplifying it like that, but that's pretty much how I see it. So anyway, now that we've got charts up, that's going to be helpful. This is a chart of Nextracker, and basically we've gone sideways for a couple months in general. I mean, this earnings reaction was solid, but what's important is we're coming down to this 83 line and holding it, and it really coincides with the start of earnings. So everything seems strong. As the market came down, this came down a little bit, but it never broke that flag. So maybe we're getting a little bit of a discount as the market's ripped. Nextracker's gone sideways. It does never hurt to look at the TAN solar ETF, which seems to be shaping up. FSLR looks okay. I mean, it looks good. Array is another one that's holding up. It's not really been a super strong one. It never really moved up or went like those other companies. But you'd think PV would be a solar company, but something's going on with that ticker, so I guess not. Anyway, Nextracker seems like the one to look at. So I do think that as far back as August, August and September was the biggest run for all these companies. You have to accept that we might not get a run like that for a couple of months. And all I'm really trying to come out with here is, what are the risk levels for this company, and where can you expect it to go? So I think this shelf of 90, you can just call it 90, is a pretty good solid risk level. So risk $1, look for 10, has to be the move. So, maybe what exactly are you risking? I don't know. This open back here, maybe you can buy over 91 and change. But just find something that speaks to you and stick with it. Otherwise, it's going to be hard to it's hard to get situated in this company when it's not building a flag, and it hasn't gone up when the market's gone up recently. So just something to be aware of. And then for this other company, I do think Path, what am I talking about? Path, Lemonade. I just talked about Path. This flag looks awesome. It really does. This moving average is a good place to buy it off of, 73. And then over 80 is definitely interesting as well. So if you can find a spot in one of those places, that's probably a good place to buy it. It's definitely shaping up well. It has that characteristic of big move, sideways, whatever, big move, sideways, big move, sideways, big move. And this might not look big. This is pretty big. This is 50% in, a couple weeks. So I know it's a $80 stock. These are both early stocks. But they definitely look like they're ready to go. So check that out as well. Now, as far as what these companies are up to, solar and energy, like I mentioned, sensitive to rate cuts, but the whole market's sensitive to rate cuts. So I pretty much just try not to focus on that too much. And then there's a lot of companies that are similar that I mentioned. And then yes, I want all the companies. As far as Lemonade, there really aren't that many similar companies that are publicly traded, because it's kind of unusual to have, a little marketing automation company to go public, and they are unprofitable, and maybe that's why. I mean, Root does auto insurance. Lemonade covers the other one. I haven't heard of Root. I'm sort of expecting to hear of some of these companies. Root, KMPR. I don't think this looks interesting at all. KMPR looks terrible. And what was the other one? LMKR? PLMR? PLMR looks pretty gnarly as well. So I would just ignore these. Lemonade's kind of in a league of its own for sure. I mean, just looking at the chart. I think the investors are significant too. So keep an eye on that. This is property and casualty insurance. People love these stocks for the long term. I'm not saying to buy this for the long term, but they are in the biggest market in the I guess the East, whatever, Europe, Germany, and they do rental insurance as well. So this is behavioral economics. Like, yeah, right. Like they make pictures of, get car insurance for $20 or whatever. It's not that crazy, but they are sending customers to the right, routing them to the right insurance company, making the most money. I don't really get how they're going to replace brokers. But I guess I do. I mean, I've filled out, actually, I definitely get it. I've gotten insurance online without talking to anyone. And I guess if you don't talk to anyone, why do you need anyone to sign off on it? Don't quote me on that. I'm not in insurance. But anyway, they've got this B Corp certification. And that's kind of just a badge of honor or, lack of focus, depending on who you're talking to. But anyway, the chart itself looks to be shaping up really well. And it's hard to find something like this right now, which makes sense given, this is what the NASDAQ has done over the past 2 weeks. So yeah, sure, there's maybe kind of a flag going here, but, not really. We've just gone up a ton, and it wasn't really expected that we would keep pumping, but markets go up. So that is Lemonade. As far as companies that are similar, just to give the full picture here, outside of those, this is what they do. I don't know what telematics is. Some of these words that come out of ChatGPT. They run ads. And then Hippo is, I have heard of Hippos actually. HIPO. It would be great to find one more. Yeah, this doesn't look great either. One more company that's liquid. It's not very liquid either. That we can look at as sort of a sympathy or a laggard to Lemonade, just to see how the sector's doing. But the challenge is Allstate and Progressive are so big, and they're kind of the client. So not only do they move slowly 1%, but 2%, they also are very choppy. And it's kind of like saying, how is Iron doing based on Google? Google has a partnership with Iron, or Iron has a partnership with Google. It's like, well, Google's doing great, and Iron is not right now, right? So it's not really the best way to get insight into how a company's doing. But it's better than nothing to at least be aware of those. I think these are just smaller companies. I have heard of Erie, but I think in general we can just not lean into that too much. Solar is different. Solar, these companies definitely do run together. And I know there's a few more besides First Solar, FSLR, besides Nextracker, besides Array. FTCI might be on that list. Let's take a look at that. FTCI. Yeah, this one is very liquid, but definitely shows the growth of these solar tracking companies. And then the TAN ETF is probably the best one. Oh, here we go. Enphase and Sunrun is what I was looking for. So let's look at that. Enphase, I don't think has been doing great at all. Sunrun had a huge run in 2021. Starting to shape up a little bit, but there's not really any oomph in these charts. So it's just down since 2021, and then it's fine, but you can't really buy it when it just has gone sideways since August. And it's not really, I mean, there's some companies that built out bases that really look favorable. If you look at Amgen, this is a base that looks interesting. Or, you know, if we look at a massive type of base, if we're trying to find bases since August, this is sort of a base for ExxonMobil. I mean, it's channeling up, but in general, this is rough. I mean, if it only went up. I mean, it only went up. It's a $5 stock and it went to 20. It went up a lot. But I don't know. This doesn't really speak to me. I mean, I guess it's just hard when you're dealing with $5 to $10, $20 tickers like open as your competition, which went up 1,000%. So it's not always about the percent. It's also about the actual price of the stock. And this one, it's kind of in no man's land. So I think FSLR is the best peer. NXT probably a little bit more favorable to buy risk reward wise right now. It's hard to, and this is a little counterintuitive, but even though FSLR is doing better, it's a little hard to position, in my opinion. Maybe because, you know, this left side peak is down here at 245, which is not a lot percent wise, but it's, you know, 3%. And NXT, if you really, really zone in here, you could risk maybe 1% or so off of, you know, one of these highs about a week ago. So that's the opportunity. Lemonade, as far as risk, you could probably risk here, which is like a lot. It's like 5% off of, you know, about 70, or really more reasonably, you'd want to buy it over 79. So those are the ideas. Computer just crashed, so sorry for being all over the place. If you like these ideas though, and getting them in the future, hit that like button for the YouTube algorithm. If you want a free course on how to find the next NVIDIA without gambling on startups, it's 30 minutes. Hit that subscribe. You'll get that in the YouTube posts section. I post that once a month for subscribers. And if you want the best idea of the day, head over to stockscommunity.com. You can sign up for that 7-day trial. Give it a shot. The testimonials are pretty good.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. So what else is cooking here?
What's up, YouTube? Listen, family, another day is in a book, Coach. Today's lesson, because this is going to help you
skip ahead here.
That I want on your radar for tomorrow. So that's SPY going to 685, which opens the door for 689. So what does that mean, Coach? If a play has a target price, that's your first order of business, meaning getting to and through 685. If and only if they get to that number at all and close some candles on the 15-minute or the 30-minute or the 1-hour time frame at that, then it opens the door for them to go higher to that next target I just laid out for you. In this case, 689 for the SPY. Let me know if that's understood. Watch this 2 times and replay it if you need to. Same is true for Meta. That's our number 2 play. Okay. Meta had a parabolic move on today, but still has more room to run. So the next target for Meta Okay, to the upside is 675. Once we get to and through that, that opens the door for 680.
All right, we gotta chill on Meta. Meta is not, in my opinion, in the conversation right now. Reddit is, SanDisk is, just barely. SanDisk got a revenue of $1.5 billion. It's down a little bit, but they've got some huge data center tailwinds, and this stock is holding up. Reddit, $500 million revenue, up 60% year over year. Pretty incredible. There is one stock that is about to skyrocket. The company is Reddit, ticker symbol RDDT. So there's a lot of talk about ChatGPT just taking all of the searches, and Reddit actually made a licensing deal. It was one of the first big companies, I think the New York Times did as well, to make a licensing deal with ChatGPT, some of these LLMs, so they could display directly their writing. I don't know how much Redditors call what they do writing, but the point is, when you want to find something and you don't want to be BS'd, you type in and then you type what you want, and you type Reddit at the end of that query. So that's pretty valuable, even though it wasn't looked at as kind of a jokey site for a while. What's happening is they're sort of Craigslist-ifying towards, like a Meta, which is crazy to say, but they're putting ads in more of their parts of their site. And revenue is up 60% year over year, 500 million in revenue, and that could definitely increase as those ads get better. I personally know from trying to run ads other places, I think Reddits are not looked upon favorably. It's just the users don't like them yet. Not that users ever like ads, but you know what I mean. When you're scrolling through Instagram and you see something that is very eye-catching and maybe perfectly what you happen to be looking at, like it or not, it kind of fits, right? So we'll see if Reddit can adopt some of that Zuckerberg charm. And if Reddit isn't your cup of tea, there is another company as well that is setting up. It's SanDisk. And the recent revenue wasn't great for this memory company. You're probably familiar with SanDisk from, Western Digital, Seagate, Micron, Best Buy fame, when you need a USB drive or something like that. Micron, notably getting out of consumer. Consumer is their least, I think, profitable segment. Don't quote me on that, but they're getting out of it. SanDisk didn't have the most profitable quarter, but despite that, the stock still has been up a lot, and that's because there's a huge demand from data centers. So just like the rest of the economy, if you took out the AI stocks from the S&P, well, you would be taking out about 40% of the market value of the S&P. So that's crazy. If you did take those out and you look at an equal weighted S&P or just the performance of the rest of the market, you would see we pretty much have gone sideways. So maybe a little bit down in some places. Kraft Heinz saying that recently they're basically seeing a drop off. So people aren't buying as much ketchup, or like mac and cheese, which is not a good sign. It's kind of, R word worthy or adjacent. So you know what? If it's not an AI, it doesn't really matter right now as far as your money is concerned. And SanDisk, despite this quarter not being great, is still holding up. So let's jump into these charts. Let's talk about where to get in. You don't have to fall in love with these companies, but a month could be a good hold. not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so here is a little bit about SanDisk. Also, look into this Reddit revenue, but they're having demand in cloud storage and data centers, really. So this demand is actually not great in enterprise. What is happening, I think, is consumer edge memory, all of that is sort of sidelined as well. The only big thing I think is data center storage and maybe edge computing, which is what ChatGPT is trying to tell me. It's hard to exactly tell, but these data centers need massive memory. And it's the same memory that you do plug into your computer with. It's the same providers. And you can see quarter by quarter. This is the quarter, 1.7 billion. They had this goodwill impairment charge, which it's hard to say, exactly how important that is, except to say that almost 2 billion is definitely crazy. What was the goodwill impairment to SanDisk? Should be able to answer that, right? I mean, goodwill, that's like if Heinz came out with ketchup that, hurt someone, that could be a goodwill impairment. Quarter 4 of this is quarter 2. It looked like the revenue was higher. And then, you know what? This is so confusing. Quarter 1, the revenue was even higher. So if this is true, ChatGPT is very good. It is pulling from the correct sources. It's just a little confusing because this is obviously not quarter 4 2025 in June. But this ordering is basically a decrease in revenue over the last few quarters. And we've seen an absolute monstrosity of a move. I mean, August to November, it went 500%. So it definitely draws parallels to Quantum, which has no revenue. So, I know we're supposed to be fundamental, obsessives, but it doesn't matter because how are you supposed to buy a company that has no money, right? It doesn't make any sense except people think quantum computing could change the world. So here's the deal with SanDisk. It's definitely had some hits with the broader market, but this is the biggest down day since October 10th for the SPY. So we can just pretty much ignore this. Just correct this, just remove that. So, a gap down, whatever. And then notably, it's holding up on this 190 level. So this is where to look, pretty much back since earnings. But notably, the market sold off. So pretty much just going to call this earnings a wash. Just ignore the earnings reactions for this particular stock and just look at how it actually trades, which I know might drive some people crazy, but you have a really favorable level at, just call it 200. That's the closest spot to look at for a psychological level. And what you're really seeing is a possible change of character where you have a line here and then it's breaking above that. So look at Wolf. This is a similar one that, it wasn't a long-term line, but it's hard to even see, but this move is significant. It tested it here and then it formed a higher low and then it broke through. So it's only about 3 weeks that it drops down, but you didn't know that it was going to go up there. It definitely had at least here, it looked like on this failure, it might just continue down. So this is a lot too. This is 20%. So it's definitely no joke. So that's basically the opportunity in SanDisk, technically. And then if you look at Someone's asking about the meme ETF. The meme ETF has no volume, first of all. Trades like, what is this, 100,000 times at most, less than $1 million a day. So I'm not touching this. That's just going to lead to, whatever. I mean, you need stuff that moves. If you want to buy something that moves, IONZ, how about that? Basically, some type of quantum adjacent company. I'm sorry, I'm being a little facetious here. You really can't buy stocks that are very illiquid, in my opinion, because they're not good companies. You can if you're like Sequoia, or if you're some type of savant, but it's just too difficult. But if you have another question, I'm happy to be less sarcastic. Seriously. SanDisk is hard to value right now, but the data center connection is the big one. And then as far as Reddit, the number of uniques is a big deal, obviously, for a consumer company. 100 million uniques is up 20% year over year, and they raised their guidance. So as long as that ad demand stays good, what does happen is there can be less spending if we go into a recession on ads. Now, I don't know if that's going to translate to Reddit, because that's generally brand ads, and I don't know what brand wants to be, placed next to the, homemaking subreddit or the, Fortnite skins subreddit or whatever, right? I mean, Fortnite, I guess, would want to advertise there. But you get what I'm saying. It's sort of an unanswered question. So this is not some type of 5-year plan that I think Reddit exemplifies. What's happening here is there's a flag, there's growing interest, the earnings reaction has been so-so, and you can buy over this 223 level. In fact, it seems to be going up right now, which is pretty interesting. So I'm not going to say to buy it, but you know what? Might be a good time to buy it. So that's Reddit. And then as far as long term, let's say it goes to like 240 and then rejects. That could be a potential. I'm not saying to sell that soon, but that's a 10% move. It could have a little bit of pullback. It could be a good spot to sell half. And selling half is nice, right? Because look at this past move, okay? Let's say you bought, I don't know. Let's say you were crazy fortuitous and you bought here, you sold with 10%, and then you were just bummed out because you were like, well, yeah, I made 10%, but, now what? Let's say you have $100,000, make it super simple. You took a 5% position. You're super careful. So you put $5,000 into Reddit. You made 10%. You made $500. You're like, oh, well, that's not nothing. And then you still have $5,000 just sitting in this, going sideways for 2 months. So it's not exactly an airplane taking off here. But because you already made that $500, you can just sit that $5,000 in there. And what happens is you're able to sit through a move like earnings, which could have been bad, but you're able to, I don't want to use the word gamble, but you're definitely able to, be more patient that you might not be if you hadn't taken that 50% gain. So you then get another 70 to 80%, which is a pretty incredible. So now you've gotten a total of, we don't want to be totally crazy, but even if you just sold up here and you got spooked up here for whatever reason, if you get 100% on a $5,000 position, sure, you made $500, and then you made another $5,000. So now you're up from that one position, you're up a little more than 5%, right? You're up 5.5% on that position alone. And you probably took a handful of positions. So that's how you can, I mean, this is a long time. This is June, July, this is 2 months, 2 full months, 2.5 really, to make 5%. But you say you have 10 positions at a time. That's how over the course of a couple months, you could be up, 10, 15% in a few months, which a lot of people would say, what the point is that? What's the point of that? It's like, well, 5% a month, 4% a month is crazy. Like if you can maintain that, which you need extreme discipline, is absolutely crazy. So 4% growth a month for a year, it'd be easy to just say it's 50% or something, but I think it's a little more than 50%, right? Because of the whole C word thing. So 60%, which is a massive gain over the course of the year, definitely beating the market. So anyway, that's the opportunity here in Reddit as well as SanDisk. So if you like these ideas, hit that like button. It helps the YouTube algorithm, which is just people, see that they might be okay. If you want a free course on how to find the next NVIDIA without gambling on startups, I could call it, without working at Sequoia or, working in Silicon Valley, being a venture capitalist. Head over to that subscribe button. Sorry, computer crashing today. I'm all over the place. And you'll get that once a month in the YouTube posts section. I'll post it there. And if you want to head over to the Discord, where I'm headed right now, go to stockscommunity.com. We'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam